This is Retirement Lifestyle Show. I'm your co-host, Adrian Nicholson, and today we're going to be connecting the dots between Wall Street, the White House, and Main Street. On the surface, they have different priorities right now, but they're all focused on the future of the U.S. economy and the financial well-being of its citizens. And I think this is a very important topic to talk about today because there are a lot of policy changes, market volatility, and the overall, what is the consumer sentiment and the investor sentiment right now with everything that's going on with the market and the economy and businesses and corporations. All this shapes your life, your career, your retirement. So this episode, I'm going to be breaking down what's happening, why it matters, and how to stay proactive and informed so you're not retroactively reacting or being in the dark when it comes to all these changes that are going on right now. So first, we're going to start with Wall Street. And their focus is really on signals. So what I mean by this is Wall Street is forward looking. It reacts to what's expected, not just what's happening now. Use the markets as a sentiment gauge, especially now that we're in earnings seasons. I think this is a really good time where we can see a clear picture on what's going on and some of the impacts that are happening and what companies' guidance are in the future and what they're expecting. So if companies are still coming out with strong earnings and positive outlook, that could be a positive sign for the consumers and investors. But if you start seeing that turn, that could be a very troubling sign. And that's something too that you need to be aware of, whether it's a company in the technology sector, a bank in the financial, a healthcare company. The information that they give and their earnings that they're coming out with is another gauge on where you can see where the economy and markets are headed. But so far, earnings have been solid with strong forward guidance, and not a lot of guidance being given by companies right now with a lot of the uncertainty going on with the policies such as tariffs, expectations on interest rates. All that kind of creates a hard way for companies to make forward guidance, what sometimes investors really look forward to. So that's something too that's going to be on top of mind that Wall Street's going to be looking at. Also, another ace in the hole with Wall Street is artificial intelligence. That remains the market's ace in the hole because that's driving a lot of the productivity, margins, and investors' interest when it comes to investing in companies. It's one of the most researched investing trends that are going on right now. But at the end of the day, when it comes to artificial intelligence, one thing that we talked about in a previous podcast is the value chain. There are different ways you can invest in it, whether you're looking directly in data centers, cloud computing companies, or actual applications that are companies using with their consumers right now to leverage any products or services they may use. So that's still one of the big things that Wall Street wants to see as far as these companies and these business really capitalizing on all the money that they're spending in artificial intelligence and seeing if that's still creating growth, creating innovation, and creating positive outlooks for these companies in the future. So those are the two main points I really touched on right now, which Wall Street really is concerned about is, again, are companies still coming out with strong earnings? Are they being innovative? Are they still growing? Do they still have positive outlook? And if that changes, that's something that you need to be aware of and on top of, because again, that can impact your investments, your portfolio, your retirement. So staying informed and aware about that is very vital. You got to stay disciplined though, because with all the volatility that's going on right now, that can cause a lot of emotions. That can cause a lot of judgment calls on your part, whether you had a strategy in place at the beginning of the year, whether you want to keep it. This is also a good time to check the different industries or sectors that you may be heavily invested in. If you see the trend for some sectors or some industries not coming out with good earnings, not having positive outlook, and you're invested a lot in that area, that's something that you really need to consider to see if you need to make a change. Where your portfolio is positioned for the long-term growth can be very helpful for whatever market environment we're faced within the future. So now the next thing I want to move on to is the White House. And this really revolves a lot about on policies. And one of the biggest headlines we're dealing with right now that has caused a lot of the recent market volatility are tariffs. We did get some news that we are having deals with the United Kingdom and China when it comes to trade. That is one of the biggest things driving the market right now. There's one thing we know about Wall Street: they love certainty. Tariffs impact inflation, the supply chain, job growth, and all this stuff really just gets trickled down and impacts Main Street and Wall Street, which we'll get into more later. Another thing too that's on top of investors' mind, and what the White House is also dealing with or going back and forth on, is lower interest rate right now. You're seeing the White House and policymakers really starting to pressure the Federal Reserve to lower interest rates. I know that's an area for big debate and big concern whether the Federal Reserve should lower interest rate, keep interest rates. But again, the Federal Reserve says time and time again, the biggest thing that they look on is price stability and job growth. And I'm going to throw a third one, a bonus one: sticky inflation. So again, the current administration, the White House, is pushing for lower interest rates right now for the Federal Reserve. But again, the Federal Reserve is wrestling right now with stickier inflation. Inflation has come down compared to what it was a couple of years ago. But again, you're still seeing signs of higher prices, higher goods that are still staying within the economy right now that the Fed is dealing with. So also getting added to that are these tariffs. Again, we're starting to get some certainty with some deals being made, but there are still tariffs going on, which can cause inflation. So again, those are the reasons why the Fed made a pause this week and hasn't lowered rates yet, because again, they're dealing with inflation. They're focused on price stability. They're focused on the labor market. And that's something that's preventing them from lowering rates. And that's something too that you need to be aware of, because what happens with interest rates has an extreme impact on individuals, businesses, companies. Lower rates, we know, gives you the opportunity to refinance your debt, get a lower rate on your mortgage. Companies can restructure their debt on their balance sheets to get better rates as well. So staying on top of what the labor market's doing, what prices are doing, and the direction that inflation's going into can give you an indication on when to expect rates coming down. They're hard to predict, but that's something too that you need to be on top of, aware of. And the last area I'm going to talk about with the White House and the current administration, which we're not really seeing too much of or hearing too much on, because right now the biggest headline are these deals, these tariffs that are going on, is tax reform. That's going to be a big thing that we may see in the future. What type of policies and changes are going to happen that's going to in fact impact taxes, not only on the personal level, but also the corporate level? That's something too that can really have an impact, like we talked about in the beginning of the podcast, with company earnings. So again, that's something that you really need to consider and look at as well, and stay up to date on tax proposals or any tax changes, because this can impact a number of things, whether if you're trying to do Roth conversions, whether you're trying to lower your tax bill when it comes to your businesses, whether it's business planning, whether it's a retirement income strategy or a withdrawal strategy. Any tax proposals or tax changes can maybe impact these plans that you had on the beginning of the year that you plan doing forward. So the last topic we're going to touch on is Main Street, and this is where it really hits home. This can get really real right now because Main Street, as we know, are the local economy, the small businesses, your expenses, the job security, the day-to-day financial realities that we deal with. And one of the biggest concerns right now is avoiding a recession, which often starts with a slowdown in consumer spending and a weakening in the labor market. You can hear one of these things that the Federal Reserve talks right now: a soft landing versus a hard landing. And this really just comes down to a recession, whether we're in one right now, whether we'll be in one in the future, whether it's a small recession, big recession, whether it's a rolling recession or seeing in different areas. This is where maybe some industries and some sectors may avoid a recession, but some may not. This is on the top of mind, and this is one of the biggest concerns people have out here on Main Street. Just avoiding this overall slowdown in consumer spending, a weakening labor market, and just slower growth, which we know has this very significant impact on individuals, businesses, whether they're big or small. It's something that's on top of mind. And the way the individual business or individual investor can really prepare for this, whether a recession happens or not, is again We talked about this before. Build up cash reserve. Manage your expenses as best you can, just in case inflation picks up again and expenses get really high. Review any withdrawal or income strategies that you may have to see if you need to make any adjustments in the financial plan that you've made build. Always stay up to date and increase your skills, whether they're for your career or whether it's a hobby, whatever it may be. Just make sure that you're staying as competitive as possible. So again, if you take one thing from today's show, let it be this. Whether the news comes from Capitol Hill or a trading floor on Wall Street, it eventually lands on your doorstep. The more connected you are with these forces, the better positioned you are to protect and grow your lifestyle. And I think being informed about these three, Wall Street, White House, and Main Street, can give you an overall better position on where we're headed and where you are right now, so you're best prepared.
Schedule a conversation with Roshan, Adrian, or Eric today at retirementlifestyleshow.com. Roshan and Eric are certified financial planner practitioners. They, along with Adrian, are investment advisor representatives and serve clients across the U.S. with financial planning and investment advice through Arete Wealth. If you found this show helpful, gained knowledge, or enjoyed the time you spent with us, tell your friends and leave us a 5-star review. This will help others discover the show. To access our show notes, to download any of the tools mentioned in today's podcast, to ask us a question, or to schedule a conversation, go to retirementlifestyleshow.com. All opinions expressed by podcast hosts and guests are solely their own. While based on information they believe is reliable, neither Arete Wealth nor its affiliates warrants its completeness or accuracy, nor do their opinions reflect the opinion of Arete Wealth. This podcast is for general informational purposes only and should not be regarded as specific advice or recommendations for any individual. Before making any decisions, consult a professional. The show hosts offer investment advice through Arete Wealth Advisors, LLC, an SEC-registered investment advisor, and securities through Arete Wealth Management, LLC, member FINRA, SIPC, and NFA. Finally, our music is The Chance by Jason Shaw and Audionautics. It's part of the YouTube audio library, and it's licensed under a Creative Commons license. I am Ray Voices. Thank you for listening.